Let me also welcome in Nitin Raheja, who's joining us this afternoon. Nitin, it's all about the financials, so let's get started with that. I mean, we're actually looking at them as beta plays currently. I mean, look at the kind of gains that we're seeing on the likes of a Bajaj Finance and then several others within the pack as well just this afternoon, but following up, in fact, from the gains that we also saw last week. So in HDFC, Axis, ICICI, IDFC First, for example, all of them, SBI numbers this week, the entire pack is showing activity building up. What would you attribute this to, Nitin, and where would you look for an opportunity to get in?
So look, I think there is some sort of a risk-on trade that is being talked about for some time now, and also I think with the opening of the economy. So if you really look at what's happened in the last couple of months, each of these financial stocks had really taken a massive beating. I mean, they were all down. You could say from an average of the least being 30% to as high as 55-60% plus. So now that you're seeing the economy starting to get opened up, there is obviously intrinsic value that the sector has. Having said that, clearly the next 2 quarters or 3 quarters are not going to be easy for most of these companies, given that the moratorium is yet on till August end. So you will see a higher credit cost coming there. But I think the fact that liquidity is ample and there is no squeeze on liquidity, so none of these companies are going to get into a solvency-led issue. I think it's starting to see some sort of re-rating and value buying, if you were to call it, for a lot of these finance companies.
Okay, so still see a lot of buying coming in. Kunal, let's take a look at Reliance. Now, in the past few weeks, whenever we've seen a move on Reliance, it's been followed up by a new check that they've got for Jio. Today, close to 4% on RIL.
Absolutely. So 4% on RIL, and I think the stock was waiting for a breakout. So the last 3 days when the markets picked up pace, just look at the Reliance chart on daily basis or even on the hourly charts. It was absolutely flat and sideways. I think the best the stock did was, 2 days back when it just about marginally gained, 10-15 rupees from its previous day's close. But it did not, materialize into a big breakout. But, when you see 3 days or 4 days on a trot of a superb kind of a rally on the indices, large cap names like Reliance, which have done exceptionally well last 2-3 months, they can't be left out for too long. So I think which is why this is more of a catch-up rally for Reliance Industries. Now, whether this is just the first phase of the rally of Reliance Industries and the stock moves up higher or not, I think that's something which we need to see because the leadership quality has to come back with the same amount of gusto. But nevertheless, I think it's a stock which has been into a very strong uptrend. And even in the last 1 month, or I think the good part of May as well, the stock had been taking support exactly above its 200 moving average. So, one thing is certain that the stock is now taking some good support. There is a demand which is emerging for the stock at lower levels. And as of now, you see the markets outperforming or going into a rally, Reliance would keep on participating on the upside. So I think in that regard, it's a good buy on dips candidate, and maybe a short-term play on momentum could be seen on Reliance Industries.
Yeah, and that's exactly what's playing out. Remember, on the sidelines, you've got the rights issue as well, which closes on June 3rd. And there was expectation that perhaps, with the ongoing rights issue, you would see some lukewarm activity in the stock. But no, this market is ensuring that even Reliance rises up with it. What's also holding out today is, yes, the financial names, but others like an NCC, Piramal Enterprises, so the construction-related stories as well are beginning to bounce up, as is the entire pent-up demand theme. Voltas, for instance, looking good by about almost 12% as we speak as well. Nitin, you think in the interim this pent-up demand theme could be played, or do you think it's run out even when it comes to car batteries? You've got a Maharaja Batteries, Exide, all these stocks running up, or a Voltas, Whirlpool, etc., what have you, within the listed universe?
So, I mean, clearly, initial signs of a few of the consumer companies have shown that there is pent-up demand. But, please understand that the pent-up demand is an accumulation of the last, if you were to say, 45, 60 days of demand coming at one shot and starting to look good. The more important thing is that the sustainability, and the fact is that even before this event, demand was clearly struggling as far as the Indian economy is concerned. This event, you might see, you're coming off such a low base on a sequential basis, it looks very nice. But I think, give or take, as we start opening up more and more, that we will see struggles everywhere, right? So right now, a lot of the stocks are doing well because they got sold into, they got corrected into, some of them went down to extreme valuations, and you're seeing a sympathetic bounce back. But I think reality will come into play, as we go ahead into the quarter. Q1 is not going to be great. Q2 is again not going to be great. So we will see some amount of tempering and consolidation that will happen. So, don't forget, we are yet.
Just hang in there. Pharmaceuticals, that's perhaps the only pocket which is ebbing off a bit, but you can safely ignore. These are not deep gashes, A. And remember, pharmaceuticals run up as well, all that much. Nitin, what's your opinion on pharmaceuticals? If these dips were to continue, provided the rest of the market takes leadership in this leg of the recovery, you think these dips should be bought, or do you think pharmaceuticals have already reached their long-term trading averages and can be avoided for now?
I think pharmaceuticals will continue to outperform in the next few months also. However, we would like to actually focus on pharmaceuticals who have a very, very strong API base. This was hitherto, a hugely commoditized segment. However, post this major event that has gone through, and all this phenomena of moving production outside to China, I think companies who have very strong API facilities will benefit very clearly from this trend. Anybody new coming in is going to take its time. So I think those companies will and do well, are doing well so I think we are more focused on those. Overall, I think clearly the pressures in the US market will remain in the short term, which was there even earlier. So I would really look at it stock specific rather than playing it as a sectoral play as a whole.
Some of those pharma names. Let's take a look at what else is moving today. PVR, despite all of the shutdown impact and so on, continues to find a lot of takers. You've got names like a Shoppers Stop, hotel stocks, of course, on the reopening buzz. Are seeing some activity building up in today's session. Titan, as we touched upon earlier, up about 8% today, again, despite any kind of cautionary tone coming in from the management. And your white good makers, like a Voltas, for example, also buzzing in trade for obvious reasons, with summer here in full swing. Kunal, lots to choose from. What's looking good on the charts?
So yeah, lots to choose from, and variety of stocks, not just in terms of the names which you mentioned, Abha. I think it's the style of the stocks which have moved up. So it's a blend of longs, it's a blend of short covering. What had happened is many of the stocks. So start of this June series, there has been changes in the lot sizes for many of the stocks, and which is why when you look at the open interest figure on Friday, the net OI on Friday closing for many of the stocks had dropped, which means that even though the values would have remained the same in terms of the positions, but because of the increase in OI, the increase in lot sizes, the net OI in terms of contracts had dropped. Now today's price move indicates that there could be a shift of adjustment towards this OI, and you will probably see an increase in the open interest for the stock. So now today you can probably attribute that there are fresh longs which have built into these stocks individually. So whether it's the likes of PVR, I think Bajaj Finance as well, I'll put that in the same category because it was one of the beaten down stocks, and even the likes of Titan. So now since the stocks have seen a good amount of long build up, you now would probably attribute that whether there is a follow through move which could happen to the stock. If this happens, then you can judge and extrapolate the short term rally into a definite trend in the making. So I think the first signs are quite strong today, which is seeing the stocks deliver, the cash-based volume, the F&O side volume, the increasing OI. These are all perfect candidates or perfect triggers needed for the stocks to continue the rally up higher.
Let's also go across to Utkarsh. We've got some more news coming in on the aviation space. Remember, while flights have resumed, now there could be another spanner in the works with regards to a move on fuel prices. Utkarsh?
So, Abha, this is basically a new direction which has come in from DGCA. Now, this is a direction coming in from DGCA to all the airlines. And the most important part of this is, in addition to whatever has already been subscribed, whatever is the SOP which has been given by the Ministry of Civil Aviation. The most important out of these is the fact that DGCA has said that if your load factor allows, then you have to keep distance between two passengers, that is keeping the middle seat empty. Now remember, this has been a contention for a very long time, whether to keep the middle seat empty or not. But it also says that if load factor permits, most of the airlines which are working at this point of time are working at around a 50% capacity, which are not running to metro cities, is what I get a sense from the airlines. But if the load factor does not permit, then there needs to be additional protective equipment for people who are sitting in the middle seat, which can be a wraparound gown, which has to be approved by the Ministry of Textiles, or any other thing which is an additional protective equipment. Apart from those, the other guidelines which have come in are more or less, similar to what the Ministry of Civil Aviation guidelines are. But these are the two very important guidelines which are in addition and will be applicable from June 3rd. So more importantly, the airlines now will either have to do the ticketing in a manner that the middle seat remains empty, and have to at least keep some amount of wraparound gown for additional protective equipments for people who are occupying the middle seats.
That's the new rule that has come out by the DGCA, making it clear to the airlines that the middle seat needs to remain vacant. Thanks very much, Utkarsh, for giving us all of those details. Well, let's get a move on from aviation then to autos, and it's the May auto sales numbers that are trickling in. Of course, completely hit the speed bumps on the back of absolutely no volumes due to the lockdown. Let's take it across then to Karunya. She joins in with some more perspective. Karunya.
Well, given that only partly dealerships had started to open in the month of May, one cannot really get a clear picture of how sales and how demand are panning out and how they're likely to be going forward. We need to give it some more weeks or months perhaps to see how things play out. But initial channel checks, definitely what we're picking up are quite encouraging, especially from the rural markets. They've been fairly good for PVs, for tractors, as well as for two-wheelers. Now, if you look at the numbers that have been delivered so far, there's Maruti posting 18,500 units for the month gone by. Definitely, given that the estimates were all over the place this time around, one cannot really compare it with any other month or any other period in time. But standalone, it's okay-ish numbers, I would say. No negative surprises, really. Escorts, however, has done well. And, you know, all the conjecture and all the conversation that was going around about rural coming back in a big way and aiding auto recovery as well, that seems to be coming out true, given how Escorts has performed. And even if you look at the numbers delivered by Mahindra and Mahindra, the tractor figures have been fairly good, completely flat on a YOY basis, even though it's not comparable figure. But if you consider how things were in the month gone by for dealerships and for all the showrooms, etc., 24,700 for tractors is really not a bad figure to work with. Down about 1%, that's completely negligible. If you look at the auto sales, they came in just sub that 10,000 level unit, 10,000 units mark. So no negative surprises, and Mahindra and Escorts definitely are the big winners, are the big gainers in trade as well, given how encouraging the tractor numbers have been.
Thanks very much, Karunya, for giving us all of those details. Well, let's move on then to a stock that is certainly hogging the limelight in today's trading session, and that is Concor. In fact, Credit Suisse has given a major thumbs up. They've upgraded the stock to an outperform from an underperform with a target price at 475. Well, they believe that there has been a sharp correction in the stock close to 40%, which is now perhaps behind. There is inherent strength in the business in terms of infrastructure as well as cash flows. They also see attractive valuations, particularly adjusting for the upcoming DFCC, which is the Dedicated Freight Corridor Corporation, and they see potential upside from strategic divestment. They also believe that the company can benefit from the potential scale-up in manufacturing on the back of Make in India. In fact, not just that, with respect to the Dedicated Freight Corridor, they believe that there could be a modest margin boost on the back of lower cost and double stacking as well as operating leverage, and Credit Suisse sees earnings growth which could be even stronger given the flattish depreciation. There's also the news of perhaps a strategic investor, and that could help Concor prioritize their capex as well as build an adjacent business. They have strong operating cash generation and working capital deployment, which isn't that much. Valuations at about 12 times EV/EBITDA for FY22 is attractive according to Credit Suisse, but they have also flagged off some concerns. They believe that loss of market share in the West Coast, the DFCC delays, the prolonged EXIM volume downturn, as well as lack of progress in divestment, that could throw up as some concerns for Concor. But nonetheless, bullish all round. That's the latest report coming in from from Credit Suisse, pardon me. Concor has tempered off though from the earlier 9-10% that it was holding out, now just about 6% in trade at 389. Kunal, I'd just like to get in a take on the charts. If you could give us some perspective as to how you're looking at Concor shaping up on the back of these optimistic reports.
Well, the last 2 days have been particularly very good for Concor. So, in terms of volumes and price trend, there have been some pickup in the price action one for Concor in the last 2 days. So maybe some sort of an anticipation, regarding the kind of upgrade the stock would probably get. But the charts in the last 1-2 months, and I am talking of the entire month of April as well as the entire month of May, I think the stock had remained absolutely sideways. I think the best case scenario was when the stock remained in the range. I think 340, 345 was the support, and closer to 385, 390 was the resistance. So stock has marginally breached those resistances and come out of this range. But I think with this, just about a late comeback for the stock price, I would sense that maybe the chance of a stock going into a consolidation is pretty much higher. So I think I would not want to chase the momentum on Concor at this level. I think the stock should probably gradually come back to a 380, 385 levels. I think that could be a better entry point for someone who's looking to buy Concor because of the late rally and just the increase in volumes in the last 2 days. And earlier also the stock had not shown any signs of volume pickup. So the anticipation was just about very, very short-term oriented, which is why I believe the trend could last for just a couple of days only in the very near term.
Right. Okay, just some other spaces which are holding up currently in trade. Financials, of course, looking good. Some of the construction names as well are bouncing back, and related themes too. So not just an NCC, but a Piramal Enterprises, for instance, financiers like that as well are holding out currently in trade. And autos, of course, like Kunal as well highlighted, have been in a very, very steady space. Nitin, just wanted your thoughts as well on how autos should be looked at. I know that a full-blown recovery is still some time away, but these stocks have corrected. Do you think there's merit in buying?
So, I mean, within the auto space, I think clearly tractors is we just heard the IMD also talk about that you have a very high probability of having a normal monsoon. So I think that space will continue to do well. We are already seeing those numbers even today in Escorts sales or Mahindra sales and so on and so forth. Besides that, I think we are very positive on the two-wheeler space because we think that due to this whole social distancing effect, two-wheelers is a space which where people will actually prefer to spend money rather than going in for passenger vehicles and cars, which are a little higher ticket items. And given that most people are struggling with job losses or salary cuts, I think that will be a space which will take far longer to recover. So within autos, our preference would be for the tractor manufacturers and the two-wheelers.
Yeah, absolutely. We've been talking about the ancillaries as well, the two-wheelers, which are holding out just so well. And, to the earlier point, Nitin, when we had to cut across to the IMD press conference about ancillaries holding out so well. So, your battery companies, for instance, your Exide, Amara Raja, what a strong move coming in here. But there again, do you believe that these are just near-term spurts that one is seeing? Because post the lockdown, just about everyone's going to go and repair the car batteries and get them changed, etc. Or do you think that this is a sustained move that one can see?
Right now, I would not like to call the long term from a sustained move perspective. I would think this is more of a short-term trend. As I mentioned, when markets bounce back, you do see a lot of stocks which had got beaten down to close to intrinsic value coming sharply back. And that's what you're seeing in the last few days as such. I would yet think that longer term demand is going to be a concern and will take much longer to emerge.
Joining us, Nitin.